Greetings, this is Dr. Jeffrey Scott, and this is my Market MRI Pro update for Thursday, February 19th, 2026. I asked the question, are market odds in the U.S. stocks stacked against the bulls? Again, my name is Jeffrey Scott, marketmripro@gmail.com. My Google group is called Top Down Trader. My website's Market MRI Pro. This is for educational purposes only. Anything we talk about should be taken in the spirit of education, and not investment advice. The intent of all my videos is to demonstrate how I use my tools in top-down analysis. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned. Trading stocks and options should be considered risky. You should always consult with your financial advisors. My Google group is called Top Down Trader, which reflects my approach to the market. You go to Google Groups, you sign in, you go to all groups, you look for Top Down Trader, let me know how you want to be contacted. That is the only mailing list I keep, so if you want to be invited to any of my programs, if you'd like to get notified when I put a video up on the World Wide Web somewhere, you have to be in the group, and you can control entree and exit, and I won't spam you. Know your news and earnings. Well, there are a lot of things that could derail this market. We've got a lingering potential war with Iran. I think today they were given a 10-day ultimatum about their nuclear program or face the military wrath of the U.S. That's going to spike up oil. You have a Fed that earlier this week, the minutes came out, actually yesterday, which suggested that there are some that think rates might go higher with the next move. You have the ongoing entropy of the U.S. government with the partial shutdown. You have a State of the Union address coming up. And you're going into a bad part of the season. And oh, by the way, at 8:30 in the morning, we're going to get a first look at the Q4 GDP. And we're going to look at the PCE complex, which we know is the Fed's favorite inflation indicator. And then we got some PMIs and some delayed home sales and a preliminary consumer sentiment. And we still got some earnings. So I like to look at the results of some of the major earnings after hours and also the futures. We'll start with the futures tonight. Right now, Bitcoin's up 170 points, which on a $67,000 instrument is what we say in Yiddish, butkas, not much. The Dow's up 43 points. NASDAQ futures up 35. E-mini's up almost 10. Gold is up over 16. And the E-mini Russells, which led today, actually, are flat. From a earnings perspective, from after hours, open door, up 14.6%. Alarm, up 7.1%. WK, up 6.9%. HLIT 6%. RNG 6%. FND 5.9%. Tandem 5.4%. Grail down 46% on trial results. Akamai down 7.8, CENX down 3.1, RMAX down 2.9, and CARG down 2.8. So mixed earnings. The Grail is interesting, and I'll just comment on it because it is a very hot topic in healthcare. Imagine if you could take a blood test that would tell you if you were at risk of having cancer or had cancer. Imagine if you could find cancer early. You can do better. So this is a test in your blood that looks for circulating evidence of a cancer. I am a cancer doctor. Sounds great. The challenge is we need a study that shows you improve survival by doing these testing. So today there was a study released that showed a favorable trend of improving outcomes in 12 cancers, but still to this date doesn't show a survival advantage. And thus, many cancer doctors like myself are on the fence about this test. And no surprise, with a study that came out not meeting its primary endpoint, stock is off almost 50%. It is a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. My app, which I'm going to use tonight, is regular price is $26.95. I am offering it through the end of Sunday at $19.95 with discounts ranging from an additional $100 if you join my top-down trader group or you're already in it, which is free, so it's a free discount, and $200 for each of my programs you currently own. If you're interested, email me for a link and tell me what you own at marketmripro@gmail.com. And I'll probably have a lightly attended webinar from 11 to 1 on Sunday. I'm just going to do another walkthrough. There have been so many updates since the last time I did one, just to show you the different things that I look at when I do my market reviews. And then those that purchase it will get access to my quarterly mentoring sessions, including a recent one from last month and some my options video. Upcoming live presentations tomorrow at 5 o'clock. I'll be speaking at the Metastock Traders Conference. Link will be below in the YouTube or will be on the Top Down Trader note that I send out. And then on Sunday, as I mentioned, the platform demo and walkthrough. Again, link in the remarks and in the YouTube. Any questions or concerns, or if you can't find the links, just email me at marketmripro@gmail.com. And if you own the problem and are experiencing any difficulties that persist, coding at marketmripro.com. All right, let's go take a look at what we see. So we're going to start with a daily briefing where I look at some of my favorite ETFs. We were led today by VXX, which was up 2.55. Not good when volatility is leading. And Bitcoin was up 1.41. The Russell was the lead up 0.23. The dollar was up 0.15. And the major indices, the spider down 0.26, Q's 0.38, and diamonds down 0.53. You know, not a real exciting day in the markets. You could see the range between the highs and the lows was relatively narrow. If you look at the new highs minus new lows on the NYSE and the NASDAQ, and we look at the 12-month or 52-week mark, we could see the NYSE is drifting lower of positive 71, and the NASDAQ has turned lower at minus 25. New highs in bull markets are built upon new highs in stocks. And as the number of new lows increases, that's not a good sign for the overall market. Also concerning is participation. Only 44% of the S&P 1500 were up, 49% of the NASDAQ, and 48% of the NYSE. You can see that on each of these index, the number of sectors compared to the day before and industry groups also lower. A little flip-flop where yesterday the defensive things were on the bottom. Today, leadership was utilities, followed by industrials, energy and communications, and then we turned negative. And the downside was financials, discretionary, and technology leading to the downside. We can also see there are very few themes up up more than 1%. Cannabis, silver, oil, gas exploration, uranium, gold, aerospace defense. I guess with saber rattling, you'd expect defense to do well. And the losers were solar, construction, millennial consumers, Internet of Things, lithium batteries, and you can go down the list, but only the first three were down more than 1%. There was a change for the worse in the timing model. The weekly, we remain positive on 3 out of 4. The only thing that's in a sell signal is the Qs, and the price there is still below the WMA. The others look pretty stable. On the other hand, when we look, that's the weekly. And when I look at the daily, it is not so pretty. There we go. when you look at the daily, you can see we've now gone sell signals across the board. So 3 weekly buys, 4 daily sells. I'm nervous. I think that of 8 possible signals, we've now gone to 5 bearish, and that would suggest to me that the market is weakening. The US index ETFs, let's just go through them one at a time. Just to reiterate, if you look at seasonality and you look at all time, which is this one is the last 10 years, this is the last 5 years. Certainly over the last 5 and 10 years, and really all time, the next couple of days going into another week show weakness in seasonality, and this is on the S&P 500. We are just above the 100, which is held. A break of that 100 will certainly be concerning and make you wonder if that 200 will come into play. I'm not feeling real good right now. We're going to have to clear that 50 and clear it quickly. Right now, looking worse. What about the Qs? The Qs, which were the first one to break below, are in a downtrend. You got lower highs and you got lower lows. You've got negative seasonality. You are sitting above the 200 and below the 100. Which will we break first? Right now, it looks like we're going lower. The diamonds just broke today on the daily and just broke where they closed at, look at the upper left-hand corner. The close was at 494.38. And the we don't have the WMA on here. Well, we're just below. The WMA is kind of runs along with the 17 and the 21-day EMA, which is about 494, and we closed at 494.38. So we just dropped below the WMA. So we could bounce there tomorrow if we have a positive session. But we're not going higher here. We're at best, we're consolidating, but we pull back. And we broke for the first time in a while, a close below the 21-day EMA. If I look at the Russell seasonality doesn't look as bad, but it's also going down. And the Russell, unlike the others, is holding above the 21-day E and 17 simple and actually had a nice looking candle today, up 0.23. What's been concerning and remains concerning is if this market was ultimately coming down going to new highs, shouldn't volatility be coming down? And why is volatility running up that line? So I'm a little bit nervous about this. Volatility has got some strength coming up short term, and we are continuing to move higher. See if we get a higher high, but we've definitely got higher lows here. So concerning. And then the dollar was up a bit, but the dollar is so far below its prior high that I think the dollar is still, to me, insignificant. If bombs are falling, expect dollar strength. If we look at commodities, let's take a quick look at these. These were some of the better performers today. Gold doesn't look like much, but was up 0.28%, consolidating after the recent correction. Silver, probably the same comment, but I'd rather be gold, which is above the moving averages, instead of silver, which is below the 17, the 21, and the 50. I don't expect it to run up anytime soon. Oil, bombs falling, good for oil. Oil's at a recent high with good seasonality, probably goes higher. They got a 10-day ultimatum. And then natural gas has come down. And I guess the old rumor is you buy on the threats and you sell when the bombs are dropping. Or no, it's the other way around. You sell on the rumor and you buy when the bombs are dropping. So we'll see. Right now, it's the rumor of war. And then we look at the 10-year. 10-year was popped, was actually settled, closed down today, just a tad, 0.15%. And similar on the 30-year, down just 0.02%. They have come down significantly from their recent highs. So that's commodities. I like to look at market breadth. and it remains a tale of two markets. Look at this one here. The NYSE, nice bottoming tail today. Kind of looks like it's put in a bit of a flag here, and perhaps we'll break above that and go to higher highs. One could hope. So that what's really bullish. The high-low jump is at 79.65, so that's not a problem. Here was 75, but this one was at 100. So high jump worked again. Now down here, stocks above the moving averages, not much change. New high, new lows, positive but lower. And then the AD line turned negative and the up-down volume on the NYSE was positive. And the 13-week new high, new low is not showing a signal and is sitting at 0.76. If we look at the NASDAQ, a very different picture as we're clearly getting lower lows and lower highs. It has rolled over, and when I see a 0.34 here, it tells me it's nowhere close to bouncing. Could bounce, but it's not bouncing because it's oversold. New highs minus new lows is negative, not a good thing. And notice the difference here where you see red and green alternating. And then over on the NYSE, you've had almost no red on this run up. Very different markets. If we look at the ratio charts, we can see where the strength is persisting, and that's materials, energy. Staples pull back a little bit, but materials, energy, industrials are looking good. And the defensive plays, staples, utilities, and real estate look like they're trying to head back up. What's not working, technology and discretionary have sold off. And healthcare sort of in between. So I have a broader market breadth tool that has in the upper left the spider, down here the S&P 1500, the NASDAQ composite, and the Russell 2000. And if we just look around 0.77 on the spider, the 13-week 0.72, the S&P 1500, the NASDAQ is 34, and 0.50 on the Russell. And I don't see anything that's an obvious move here. So, the market kind of looks relatively balanced, which isn't good when it's falling. I don't see any oversold. Here are the buckets, and you have very few stocks above the Bollinger Band or above the bands or below. Neutral positive on the NYSE and the SP 1500, neutral negative on the NASDAQ Russell 2000. I mean, when I say the positive or negative, it's still neutral. It's just leaning one way or the other. So let's look at some of the sectors on more standard looking charts. Yes, you can see everything there, can't you? Well, you will be if I do this and I do this. Bitcoin maybe starting to bottom. Another positive session today, but up only a little bit over 1%. It's got a lot of work to do to cross the moving averages. The purple one is the 21-day EMA. The white is the 50, and the WMA 30, which is the trigger line on my buy-sell indicator, is the yellow. The next one we'll look at is technology doing nothing. Discretionary pulling into the 200, not attractive. Communications broken down. Industrial running again. This thing has been one of the strongest in the market. Financials broken down. Energy looks great, but if we sign a deal with Iran, expect it to fall. Probably not like silver though. Materials after a big run up, taking a breather, still bullish. Real estate, similar, taking a breather. Utilities, taking a breather. And staples, taking a breather. But all three of the defensive are still in a buy signal. Here is healthcare. It's kind of going sideways. Back to Bitcoin. And then I like to look at the major stock holdings that people have, which is the MAGs. So let's just take a look at these real quickly. MAG extended. Amazon bouncing here. Did I buy some down here with this doji followed by a close above it? I did. It's John Person's best signal. It's even better when it's on a weekly, but high close doji, I think it's a great signal. So I started nibbling. It's not doing much. Apple struggling to get back above moving averages. Google, nope. Meta, nope. Whoops, sorry about that. Netflix, no. Tesla, not yet. And Nvidia earnings next week and kind of just waiting for it. And as we talked about, I thought it would go sideways to earnings comes in, and it is. Microsoft, this one led the drop, not yet. Someday. So the problem with those is I bet you, just like I, have some of those in our long-term portfolios. They have big time profits in them if you've been holding them more than just a few months. So I let my long-term portfolios do just that. It's my shorter term accounts that I'm much more active in, and I don't have them in this account. Labu just doesn't want to die. Had a positive session today, up a little bit, and now with a new buy signal. See if that persists. If you look in the past, we've gotten these buy signals, and they usually last a while. Pharma holding, maybe give me a little flag here. Data centers, have had a few days of weakness here. Probably led to some memory weakness among other things. And then defense breaking out. What happens when you go to war? Defense stocks do well. And let's just take a look at some stocks. So the first thing I want to emphasize is I'm not adding to my longs here. We have options expiration. I do a lot of stock replacement using options. I'm quick to buy puts after I get a big jump to lock in profits. And I got a lot of things that are expiring tomorrow, and I'm going to let them expire and put the money in the bank. When something is in the money and it expires, you end up with the stock long or short, depending upon your option. If you have a spread and you've maxed out the spread, often when they expire, they cross each other out, and you get a check, or you get addition to your brokerage account. So I will either be closing them out, or I'll let the broker close them out after hours and put the money in my account. I'm going to have half the holdings that I have right now at the end of the day tomorrow if I do nothing. And the only way I'll change that is if we see a pretty dramatic move in the market to the upside. And that could happen if the market likes the GDP and the PCE. We also are in the second quarter soon, and the market doesn't like in the midterms the second and the third quarter. So if we look at the top-down perspective, we look at what was the leadership today, energy, industrials, and utilities. Now this can be different than what you saw in the S&P 500 sectors because this is looking at close to 4,000 stocks. These are the leading industry groups. We just rank those from one-day performance. 1, 2, 3, 4, 5. Heavy and heavy on energy and commodities. Down here are the stocks. I quickly like to throw a filter on 500,000 shares and $5. And if I wanted to, I would go through each one. So let's look at a couple of them. Let's look at up-down impulses. John Deere, how good is this stock? So it must have had earnings. Let's see. Earnings came out on the 19th, which is today. Interestingly, their earnings were down, their revenue was down. The street loved it because there was surprises, and the stock gapped up and closed much higher. It's looking at 555 in the May period versus 664. This was 242 versus 319. So I think surprises and the strength of the market, the rotation into industrials, trades at a multiple of 30 and pays a small dividend of 1.37%. Expro Oil Services. This is a belt hold day. It's a bullish engulfing pattern, correct. But when it trades this low, opened here, traded down here, and closed up here, that's a pretty impressive day. Earnings growth 40% on a multiple of 63. Big earnings surprise, and that drove a pretty big intraday reversals. The only thing I have difficulty with this is it's up here, it's getting extended from that 200-day moving average. PWR, come on. I'm on hotel internet, so you know what that means. So Quant Services breaking out. This thing's obviously extended. Big run, and it probably did it have earnings today? Let's see. It had earnings with a surprise on earnings and revenue. Oxy, we know that did well today. They were talking about it all day on CNBC. Warren must have been happy. Big breakout here. But how much of this is fundamentally driven because of earnings versus fundamentally driven because of the war potential? OMC, which is advertising all over the place. Big move up today. Were there earnings? I don't think there were earnings. I don't have an earnings there. Let's see what the story was. Declares a dividend. Misses earnings and revenue despite double-digit sales growth and higher margins. Well, I guess the market liked double-digit sales growth and higher margins, or they liked the dividend. So it's interesting. All the leaders had earnings out today. All right, so we can look at it from a top down. And the other thing I like to do is to look at it from a bottoms up perspective. So let's remove these. The best part about top down is you've got the wind at your back. You've got the best industry groups. But I think it's a lot more fun looking at what the best stocks are in the market. So I've got a couple of scans that I like. My A plus scan, which also could be called the double momentum filtered. And it's stocks that have some features that I like a lot. ALMS. Wow, this certainly is a beautiful chart. Big gap up here back on January 6th, a run up, sideways move, and boy, does it look like it's going. What do we know about this stock? What is it? We don't know much. So it's a biotech stock. Any news? Well, it doesn't tell you a whole lot about what it does here. All right. Well, if you have a phase 3 study that's positive, it probably means you got a good chance of your drug being approved. Their drug is for psoriasis. If you see how many TV commercials we have for psoriasis, that should tell you the commercial opportunity. That is interesting. I might look at this one. CAPR is another biotech and similar pattern, pull back in a breakout. Some of these stocks that have um, drugs that are potentially um, going to get approval uh, will run with no earnings, no story. They're high risk. And now they're starting to handicap the FDA because of there's a lot of craziness there. Let me just leave it at that. And of late, there's been some thought that they might be easier to get access. So Capricorn looks kind of interesting. I don't know what happened there. Um, all right, what about what do we have here? DEC, Diversified Energy Company. Now, this one's below the 200. I'm going to skip it. Herbalife, we looked at it yesterday, and I think I made a comment. If I didn't only didn't know this company and its history because it's had some issues, What a beautiful day today. They announced a famous athlete was investing in it on a wellness program. Look at the volume. Wow. And notice we were talking about this yesterday because it was giving us the A study. So the momentum A plus is looking at two of these blue dots right above the yellow line, which are momentum. It's looking at your relative strength, which is strong, your volume. Now this stock is also getting extended, which is a negative. RELY, Remedy Global. Yeah, this thing's been a dog. It must have had earnings today. Let's see. Earnings after market yesterday, 19 cents, big earnings per share growth. Revenue up 25%, big multiple. Um, Street loved it, a big surprise. Looking at 6 cents coming up versus 5 cents, so a little bit of growth. Big gap up. I don't look at the high-low jump. It's at 5.54, or excuse me, it's at 57, which is nothing. Interesting move. I'd look for this to retest the 200 range resources. I saw this over the weekend, um, railing on the issues with Iran and the fact that there's some good stories going around about natural gas. Here's that X Pro that we saw in the top-down perspective, the one that I said had a bell toll. That's the A plus. All that it requires is to be in an uptrend with a weekly bongo, to have those two momentum dots, good relative strength and good OBV. The other scan, one of the other scans I like is the A scan, and these are looking for pullbacks in an uptrend. So here's another biotech, Cullinan Therapeutics, definite uptrend. It pulled back and it broke out, and it's requiring the squeeze and up a reversal signal here, pullback in an uptrend. It requires the relative strength in the OBV. Let's see if any of the others look good. They certainly like Herbalife here as well. ULS, UL Solutions, um, earnings came out. They don't even look good. I mean, negative surprise, positive surprise on revenue. All I could think of on these is the street must have had a lot worse expectations. What's AR? Is that internal resources? So this is an MLP. MLPs typically pay a dividend. This one does not. Maybe this is an expiration. Oil gas company. It does. They have an MLP as well, which is a different name. And you could see strong seasonality. Of all the stocks so far, that CAPR looks really interesting to me, and that X Pro. The other thing I looked at is we developed a new scan together, and that's my rockets in flight. Let's see how many are up. 257, that's a nice number. And if you don't know why I like this scan, if you take all the stocks and create one index for them, that's what the index looks like. And I'm now finding that this is the place for me to go fishing. So I don't want to give you the impression that I think this is a great market and I'm going crazy buying, because I'm not. I said it before, I'll probably end up with half the money long at the end of the day tomorrow than I have right now, just because I've got some good option wins that are going to be closed, that are already maxed out, which means I'll let them expire and get the money in my account on Saturday morning. Um, I think this market, as my title is, I think there's a lot of risk. Now, if we get a perfect GDP and PCE, so if the GDP is up higher than expected and the PCE comes in lower, then that probably means the market's excited and goes higher. If the GDP is low and the PCE, excuse me, is low, market might be okay because we can go ahead and start cutting. But if the GDP comes in weak and the inflation is high, ouch, we could start to see that fear of the market selling off coming back. Have a great day in the market. Have a great weekend. Think about doing me a big one and just registering for both of those programs. And if you can make it live, that's great. If not, we'll get to the video. Take care. And I'll just leave with One Stop Systems. I looked at this while we were talking. Earnings are coming out in a month, so I don't have to worry about earnings. They've sold some technology. But what's interesting is, close that up. God, you just broke out of a line that's been touched multiple times. That's interesting to me. Massive volume, a CPR, gap, volume breakout, momentum, relative strength, and OBV looks good. And this might be my favorite of the day, OSS. Can't help myself. Have a great one.